Top 10 Stocks to Buy in 2023. Hi guys, welcome to my channel. Before we get started, make sure to hit that like button and also subscribe to my channel. Top 10 Stocks to Buy in 2023. So make sure to watch the full video. As the market has so far in January shown strength, each of these could be a huge success this year. 2023 is off to a rousing start for investors. So far in January, the S&P 500 has gained about 5%, and the prices of many individual stocks are starting to rise once more. It's still too early to predict the course of the year, but even if a bull market emerges once more, investors should continue to apply some of the lessons they learned in 2022. One of them is buying great stocks and holding them for the long run as opposed to selling them quickly. In light of this, here are 10 stocks that all have fantastic long-term potential. They're worth buying now and holding on to from this point, even though some of them might soar this year. The companies on the list are Dutch Brothers minus 2.03%, Global E-Online GLBE minus 5.52%, Lululemon Athletica, Lulu minus 0.46%. Marqeta, MQ minus 1.33%, Mercado Libre, Meli minus 1.68%, and New Holdings, New minus 6.55%, Airbnb, ABNB minus 5.61%, Amazon, AMZN minus 0.97%, American Express, AXP minus 0.36%. 10 New Holdings, 44% decrease in the past year. Another thriving fintech in Latin America is called Nu, a Brazilian-based digital bank that has successfully cornered a sizable portion of the market, is expanding into new markets and offering new goods. The third quarter of 2022 saw a staggering 171% increase in revenue, and Nu also reported its first profit as a public company. This could be a good time to buy since Nu stock has been essentially flat in January. 9 Mercado Libre, up 8% in the last 12 months. As it maintains its dominance of the Latin American e-commerce market and shifts its attention to fresh fintech services, Mercado Libre has been an impressive success story. Following several quarters of triple-digit growth at the start of the pandemic, it is still showing high double-digit sales growth, and it has returned to robust profitability. Investors should anticipate further gains from this conceivably huge winner since Mercado Libre stock is already up 31% in January. 8 Marqeta, a 42% decrease from a year ago. The stock on this list with the worst performance over the previous 12 months was Marqeta. It hasn't turned a profit since going public, and in the current bear market, unprofitable tech stocks have been falling. A fintech company called Marqeta offers other businesses payment and financial solutions. It developed the technology that powers many of Block's services, for instance, and develops unique solutions for each client. Sales increased 46% year over year in the third quarter of 2022. Indicating continued strong growth. New customers are also continuing to sign up. Marqeta stock is up 11% in January, and 2023 might be the year things start to change. 7 Lululemon Athletica, no change from the previous year. Customers can't get enough of Lululemon's high-end activewear, a commitment to the active lifestyle. Timeless designs, patented fabrics, and premium branding makes up the brand's unique formula. Each quarter, sales increase by double digits on average, and Lululemon is able to maintain its high prices while still being comfortably profitable. The stock fell after investors expressed dissatisfaction with management's updates to its fourth quarter outlook for 2022 as opposed to all the other stocks on this list. It is currently down 3% in January. But make no mistake, this powerhouse apparel stock has tremendous growth potential, and investors can take advantage of the dip to purchase shares at a lower price. 6 Global E-Online, 21% lower than a year ago. The best e-commerce stock you've never heard of is probably Global E. With clients like Walt Disney and Macy's, it provides cross-border e-commerce solutions for both small and large businesses. Because of the value of its shipping and payment solutions in any economy, it has been able to sustain high double-digit sales growth throughout the uncertain economy. Since it receives a cut of every sale made through its platform, this should get even better as the economy grows. The global stock has already increased by 26% since January, and it may continue to rise in 2023. 5 Dutch Brothers, 18% fewer sales last year. A growing coffee chain in the west of the country, Dutch Brothers has 671 locations spread across 14 states. It sees the opportunity to reach 4,000 stores over the next 10 to 15 years and has a distinctive culture and rapid expansion strategy. Last year, inflation was somewhat of a challenge, but management is addressing lower same-store sales by raising prices. Overall sales have been very strong, rising 53% year-over-year in the third quarter of 2022 as Dutch Brothers expands. Profitability is also increasing, and Dutch Brothers should prosper as the economy recovers. Dutch Brothers stock has increased 20% since the beginning of the year and could rise even higher this year. 4 Chipotle Mexican Grill, a 16% increase from the previous year. Over the years, Chipotle has been a fantastic stock to own because customers rave about its delicious fast food, which leads to high sales and profits. It is currently quite large with almost 3,100 stores, but management believes there is room for 4,000 more. Chipotle has been successful in increasing prices to cover rising costs, resulting in ongoing double-digit sales growth despite inflation. For Chipotle, both now and in the future, there is simply a ton to be optimistic about. It was already 15% higher in January, and it should keep rewarding shareholders through 2023. 3 American Express, 3% lower than a year ago. Even though American Express had a successful year in 2022, its stock is still down a little from the previous period. January has seen a slight increase so far. In order to gain market share among millennials and Gen Z consumers, the company has successfully shifted away from its previous positioning as the credit card of an older, wealthy clientele. With benefits that appeal to this group, it keeps updating its card options. Sales and income are significantly impacted by fees, which are levied for many of its cards and which cardholders are willing to pay for the benefits. American Express is in a good position to continue growing as its primary industries of travel and leisure continue to improve in 2023. 2 Amazon, 32% lower than a year ago. The value that Amazon stock had increased since the pandemic in 2022 was almost completely lost. The e-commerce king has had difficulty because of sluggish sales, net losses, and a bleak economic outlook. But so far in January, it's up 16% for this formidable business. The future is still promising. It continues to represent a sizable portion of all U.S. e-commerce sales, which has enabled it to overtake Amazon as the second largest U.S. company in terms of sales. Each year, both Amazon and e-commerce are anticipated to increase. Amazon Web Services continues to grow profitably while investing in numerous new ventures and acquisitions. No-brainer powerhouse stock. Amazon should see years of growth. 1 Airbnb's annual decline was 33%. With its incredible recovery from pandemic declines, Airbnb is now on track to pioneer the travel sector in new frontiers, literally. It is a true industry disruptor that is profitable as it grows and has enormous potential for future expansion. Airbnb has been able to adapt to meet demand thanks to rentals in upscale locations that big hotels can't provide and the ability to provide reasonably priced long-term lodging. The best scenario for its future expansion is its capacity to repeat that process and adapt to trends. The price of Airbnb stock has increased by 23% so far in January and is expected to continue rising. So, that's it for today. We hope you enjoyed the video. Use the comment section below to tell us what you think about the video. Also, make sure to subscribe to our channel and click the bell button to be notified of all the latest videos.